All right, guys, welcome back to another episode of Not So Late Night Show. So, I know it's quite a tough time now in Malaysia because the pandemic has been an ongoing concern. And of course, automatically from an investor's point of view or perspective, the questions that we always would ask is, will our banks be okay? And will the bank investors actually be safe from the so-called share price correction this time around? So today we are going to talk about one of our biggest banks, not only in Malaysia, but also in ASEAN region. So the company that we will be touching on as our Not So Late Night Show candidate for tonight will be Malayan Bank Berhad, or known as Maybank Berhad. So let's go straight into the company. So of course, there's a disclaimer here. Of course, we'll be talking about a real company, but then again, we do not actually indulge you to buy, sell, hold, or do any related decision based on our sharing as of tonight. If you are really interested of the potential and the prospect of the company, do actually study further and use what our points and what our directions to further study and analyze the company before you make your investment decision. All right, I will actually pass it to Chumbing to actually go deeper into what is Maybank's business all about, what is the bread and butter, and also the supplementary income streams of Malayan banking part. So Chumbing, what does Maybank actually do?
Yeah, if you're Malaysian, of course, you'll be familiar with this black and yellow color logo. I think since small, I think the default bank that we will go after is Maybank, unless your university asks for other banks. Let's say Utah will ask you to open a public bank account. Me, myself, graduated from Multimedia University. They asked me to open for CNB and so on, for example. But nevertheless, Maybank is definitely in Malaysia, they are the most valuable bank, the top bank in Malaysia, and also the largest cap company listed in Malaysia. Within ASEAN itself, they are the fourth top brand. So this is some of the overall introduction about Maybank, right? Then, of course, what Maybank does beyond this bank is they are actually offering insurance services as well under the brand of Etikas. And beyond that, they also got trading services or investment or wealth management services. So this is the overview of Malayan banking Berhad. And then we wanted to actually give you a deeper look about this bank on where are they operating at, what is their services they offer, and before we jump into all the numbers, right? So, of course, Malaysia is still their home ground. I mean, Maybank, majority of their profit, especially coming from Malaysia, if you talk about the FY 2020, is about close to 90% profit come from Malaysia. But nevertheless, they also got different branches and also services across the ASEAN region. Meaning after Malaysia, it's actually followed by Singapore, Indonesia, and so on. So you can see they got deployed about 2,000 plus retail branches worldwide. And if you can see inside the map itself, is all the different number in each country. But of course, in summary, if you talk about regional breakdown, Malaysia is the home ground. They play the most vital role when we talk about their performance. So if Malaysia is, let's say, impacted by pandemic, impacted by any other incidents, of course, being the top bank in Malaysia will be impacted, right? So you can see all the overall number is showing a downtrend if you compare year on year. But of course, probably FY 2020 should be the worst year. And then we shall see what is happening in Q1 when we move into those numbers. Now, of course, before we jump into the breakdown of different services, we will give you some introduction. Typically, Maybank will classify their services into a few types. The biggest one is actually coming from this group, community financial services. So in layman term, it's a banking services for individuals, SME, and also mid-sized corporates. So it's all the retail banking services. You can open a saving accounts. You can actually do wealth management, get financing. You can get credit cards and so on. So this is the one that very close to us as an individual. But of course, moving on, they also got another segment. They call it as Group Global Banking, which is to serve large corporates and institutions. So it's not so much about retail banking, but it's wholesale banking services like transactional banking, investment banking, and so on. And of course, they are the one that actually park their insurance arm within this listed entity as well. So under the the brand of Etikas, so you can actually purchase not only conventional, not only Islamic insurance, but also the conventional, or we call it the general insurance, under the brand of Etikas. And this is some of the deeper look on what is the different type of insurance products offered by them. Of course, in Malaysia itself, if you look on the right-hand side, of course, motor insurance is the core one because it's compulsory to be purchased if you own a vehicles. So that's why it actually contribute the big sum of amount when talk about the insurance products type. Now, of course, but followed by MATs, personal accidents, fires, and so on. And nevertheless, when we actually cover the top 3 category offered by them within the banking itself, they also have another segment, or we call it a sub-segment, which is focusing into Islamic banking. So I think this is some of the things that we should take note. It's one of the strengths that Malaysia Bank is actually able to offer compared to other banks in ASEAN region, for example. Then we cover all the different type of services offered by them. You might be confused by the terms, but this is the reason why we give you a walkthrough before we go into this number. So you can see the core or the major contributor coming from the group community financial services, which is the one that closer to me and you to get loan, to get saving services, right? Of course, the FY 2020 is a bad year due to pandemic. You can see, especially the profit part on the bottom side is a year-on-year decrease of about 43%. Then, of course, I would say this is something that people having fear about something that's unknown. That's why most of the time they would tend to keep the cash, or to actually survive through the period. But moving on forwards, 2021 onwards is supposed to be back on track on recovery. Although Malaysia case still quite high, but you can see vaccination rate is actually picking up, right? But moving on to the group global banking, this is the part that they still able to show year-on-year increase. So it's only the retail part that got hit quite badly. But you talk about insurance, you talk about the group global banking, it's actually showing a good numbers, right? So this is something that you should take note, not just focus into the one that, those services that is actually closer or more familiar to you. And of course, this is the deeper look into COVID-19, how it actually impacts Maybank. And this is a chart that actually help you to understand what is the percentage of loan under repayment assistance. Of course, Malaysia have this program called moratoriums right after the pandemic's outbreak, I think ever since March 2020. A lot of people just opt in for this moratorium. That's why you can see the loan assistance is actually as high as 71.9 during May 2020. But of course, after the periods, it actually dropped down to about 14 to 15 each. And of course, why is still that much, moratorium still continue on for certain segment of the people. But you'll be surprised, Malaysia is not only the one that offer this, but for Maybank itself, if you look beyond just Malaysia, Singapore and also Indonesia, they also offer different type of repayment assistance or relief to help them get through these tough periods. And of course, the one maybe slightly worrying is Indonesia is actually showing a much higher number compared to Malaysia. But nevertheless, the assistance or the different type of products is quite well spread lah. You got assistance on mortgage, auto finance, and so on, right? This is just some of the overview. Of course, good signs that actually being shown for the Singapore side lah. The recent quarter, they actually dropped down to 5.7. And of course, if you talk about just the business itself, to actually keep them ahead of the competition, they also having some continuous effort into building their digital solutions. So you can see if you talk about the penetration rates in terms of the usage of Maybank to you, the platform itself, or the apps, or even QR Pay, you can see a very nice number actually growing since, I mean, this is just a short number of time, a few, I mean, it's a snapshot of a few quarter, but it's actually picking up, especially driven by this pandemic, right? So, I mean, this is just some of the other things that you should take note I mean, in my personal opinion, especially the new application offered by them called MAE, is actually something very similar like e-wallets, allow you to actually do offline transaction by scan some QR and make payment. So they make it slightly more, which is something that other e-wallet player cannot do it. They have a lot of banking services within that. You can actually check how much you spend, what is the category of the spending. You can even do opt-in for some saving program. Let's say you spend 5 ringgit 50 cent, the 50 cent will automatically converted into some investment products that help you to invest on behalf. So all this is some fantastic thing done by Maybank on the digital front. But nevertheless, they also have this marketplace called Sama-Sama Loka, which allow, I mean, those normal SME to be able to list their products in there. So they wanted to help as well, to act as a bank and give back to the communities. So this is pretty much what Maybank are doing from the business perspective. And of course, most important thing or the most crucial stuff that you wanted to ask is how are they doing ever since the pandemics, and are they on the route to recovery or not yet? So I'll pass it to Chupan to actually share more about the numbers.
All right, thank you, Chun-Bing. So I think if you guys were, frequent our Not So Late Night show during the depth of the pandemics, which was around Q2, Q3 last year, if you come across any of our sharings, you would be surprised that back then we were very, very bullish or very confident of a rebound of the economy and also the banks, right? So back then, when banks were trading at historical quite low prices, we actually were confident that the price is right to actually keep an eye on these counters. And up to today, we are proven right. And as things did actually recover, and you would be actually getting quite a lucrative dividend yield if you actually targeted banks when they were at their weakest in terms of the pricing. Of course, from the performance wise, yes, it's undoubtedly true that banks actually suffered the worst during Q2, Q3 last year. But as I said, when it comes to investing, it's always about what's going to happen in the near term, mid term, and also the long term basis. So of course, we will take a deeper look into the P&L summary of Malayan banking. So you can see that yes, it's quite true. If you compare 2019 fiscal year to 2020 fiscal year, there are definitely some kind of a reduction. Say, for example, in terms of the net fund-based income, things actually reduced around 4.9%. And of course, one good thing that you can also actually keep an eye on or actually learn is that they also did some initiatives to reduce their overhead expenses. Times are hard, and to actually ensure that the bank gets hit lesser from any of the expenses and any of the allowance for impairment. They also have to maintain their overhead expenses as well. Of course, the one that hit them really, really hard will be the net impairment losses. So times are bad, bound to have some parties that actually default or actually delay their so-called loan repayment. So hence you can see that there is a more than 100% growth in terms of that. But come forward to the latest quarter, which is first quarter of fiscal year 2021, compared to the preceding quarter of 2020, the last quarter, you can see that a lot of things have started to improve, which was in line with what we saw. So your net fund-based income increased, your net fee-based income also increased. Everything has actually rebounded once you actually come to first quarter 2021 against fiscal year 2020, where we see that COVID pandemic actually hit the banks really, really hard. And of course, overall, you see a very, very good improvement in the overall earnings per share as per the basis. previously fourth quarter, they were just doing around 13.7 cents, but coming in the latest quarter, things actually rebounded to 21%. So it is what we expected. Banks are usually hit hard when the pandemic or when a black swan event happens, but it's how strong and how defensive they are, and actually to be a little bit more far-sighted when it comes to predicting a recovery in the banking segment or the financial segments as well. So overall, you can see that things started to recover when we compare first quarter of 2021 against the fourth quarter of 2020, and you see double-digit recovery returns for the bank's performances. Of course, if you look at the total overall bigger picture, 2020 was a year where things were actually worse off compared to 2019. Malayan banking might be a big and boring company, but if you look back at the 10-year history, it still shows some kind of stable growth. And of course, the profit attributable to equity holders also has been growing quite steadily. Of course, 2020 was a one-off year where the pandemic hit a lot of companies very hard, and Maybank, being the company in financial segment, also got impacted a little bit, right? So the revenue actually dropped by 1 billion, and also the profit attributable to shareholders dropped by around 1 point something billion, right? But of course, if you look at the net operating income, the breakdown that we showed just now, the one that actually got hit hard would be the net interest income. So you have less people going to the bank for loans and also mortgages, and also a delay in the repayment. It will definitely hit on the net interest income. So you can see there was a negative 8.3% against 2019. And then apart from that, that's the only part that got really impaired. Your Islamic banking scheme actually grew, and then the other operating income in terms of brokerages, in terms of fees, actually improved marginally, and of course, the insurance premium actually contributed significant growth, around 40% compared to 2019, and of course, due to tough times also, you see that the insurance claims and benefits actually also grew as well, which is grew by 25%. But overall, I would say that if you take apart the so-called misperformance from the net interest income portion, Maybank actually delivered a solid kind of defensive return, even though it was a tough year in 2020. And of course, if you look at the overall contribution of the entire business segment, you can see that net interest income actually came down quite a bit from 2017 all the way down to 2020, because you have lesser contribution, hence the percentage that it contributes to Malayan banking's overall operating income also set to reduce. But of course, there's also other pillars coming in. As we saw just now, net earned insurance premium actually increased, so the orange bar is actually much higher than the preceding year, and it's a very positive sign as well. Right. So overall, I would say that it's pretty much a solid defensive performance that Malayan banking is fortunate to have many supplementary income stream that is helping to buffer the so-called lower guidance or the lower performance from the net interest income for fiscal year 2020. And of course, those who might be a little bit scared or a little bit uneasy for the net interest margin, which is how much margin the bank is actually earning by taking our deposits and then borrowing out to borrowers. You can see that yes, it is true that the lower interest rates actually does help to lower down the net interest margin on a consecutive yearly basis. But come to first quarter of 2021, you can actually see a slight uptick. So whenever your overnight policy rate, your OPR, gets reduced, yes, there's a small chance or small period where the banks don't actually reflect or adjust their so-called deposit rates, the interest rates for your savings account and also your current account. But after that, they'll usually adjust it downwards to match or to mirror your OPR rate trend. So once that actually gets set into stone, the NIM or the net interest margin doesn't really run that far. And you can see that on a Q-on-Q trend, actually, you can see it came down to the lowest at 1.96, which was the peak of the pandemic last year. But after that, things slowly to adjust upwards, and we have actually obtained around 2.31% against the lowest point of 1.96. So it's a very positive sign that OPR shouldn't really hit the banks and that severely. And of course, talking about how much asset or how much loan that the banks actually need to impair, it usually ties back to the asset quality of the bank, and the so-called KPI or the ratio that we look at would be the gross impaired loan ratios or the non-performing loans ratio. So you can see that over the few quarters as of March 2020 over to June 2020, where the peak of the pandemic happened, up till the latest quarter as of 2021, you can see that there is an improvement. The non-performing loans were actually at 2.2%, but it actually shrunk down to 1.98%. But you look at the overall ratio composition, which includes the restructured and rescheduled ones, and also the performing loans impaired due to judgmental and obligatory triggers, you can see that it went from as high as 2.71% during the peak of the pandemic. As of today, 1 year later, it actually dropped to 2.2%, which is very, very encouraging to see. And that actually gives us a kind of gauge that the economy is slowly recovering. Of course, right now we are at the third or fourth wave of COVID for Malaysia, but vaccination rate is actually picking up, and we would actually anticipate things would not be as terrible or as worse off as they were back then in the Q2, Q3 of 2020. Right. Of course, you can see that in terms of the gray line, which is Singapore, and also the orange line, which is Malaysia, things have slowly trended down significantly, right? From a basis point of view, the only one that is a little bit more worrying would be Indonesia, which I think the cases have surged past in terms of per capita versus India. So this is the only worrying stance that you might want to take a little note. But then again, do take note that most of Maybank's revenue composition comes from Malaysia. So even if it gets a little bit too worrying for Indonesia, it's just a small percentage of it, right? Of course, we won't go through the entire asset quality presentation by Malayan Banking, but you can see here that overall, the gray lines and the orange line is the performance of Singapore and Malaysia. Malaysia being the key market, and you can see that if the Malaysia trend line is actually showing a little bit of improvement, which is trending down, things shouldn't be as scary as possible. Of course, if you want to be a little bit more due diligence, you can actually read deeper on the so-called I would say darker orange color, which is the Indonesian one, which is actually showing a little bit of a more worrying stance, and also points that you should actually dig deeper if you want to really assess the risk posed by the Indonesian market. And of course, if you look at the overall net impaired loans ratio, it's really stable around 1% to 1.5%, right? So there were brief moments in 2016, 2017, it actually went up higher, 1.5%, but eventually, even though during the very worst of fiscal year 2020, it still fluctuate just a little bit above 1%. Of course, before we go deeper into more ratios, just a little bit shout out to what we are actually offering to our premium members. So we do have a subscription model where we actually take things offline or to another site where we have a Facebook group to have interesting discussion on stocks, not just in Malaysia, but around the world. And of course, those who have actually attended Stock Plus 2021, where we actually pick out 10 stocks to be more positive and to be bullish on for the entire 2021. 2022, we'll be doing the same thing again, but it will be bundled against into Kaya Plus Premium Club. Of course, there will also be premium analysis and premium articles as well. So this is just a little bit of what we did in our latest private video sharing. We actually talk about investing in China, about the policy, about the so-called overall structure of how China operates, and then how we can actually take that into as an advantage to invest into China companies. Of course, here's also a snapshot of the premium articles and analysis that we do write about for Malaysia companies and also to US companies as well. Of course, we also have special thematic sharings as well. And the one coming right up would be about semiconductor, and it would be happening this Saturday at 24th of July 2021. The time will be 10 a.m. to 4 p.m. Of course, it will be free for Kaya Plus Premium members, and if you choose to attend the individual event as it is, it will be priced at 199. Right, back to our key operating ratios. So when it comes to investing in banks, a lot of times you have to gauge a lot of ratios, but I will bring you through some of the more important ones. So comparing fiscal year 2020 to 2019, there will be some kind of a reduction or correction downwards because it was a bad year, right? ROE actually decreased, your net interest margin also decreased, and also the loan to deposit ratio decreased as well. Maybe some people wanted to hold on to the money on their own instead of putting it into the bank, or also due to the fact that loans didn't actually grow as it was a tough time. Many people got retrenched and then they were unable to obtain loans, hence you have a loan to deposit ratio that shrunk. Right. But the good thing is cost to income ratio also decreased as well. The bank was a little bit more prudent in managing their expenses. So you can see that this is one of the bright side, even though the top line decreased, but the cost to income actually decreased as well. And of course, compared to the latest quarter, which is first quarter of 2021, things actually improved significantly against the down and downside backdrop of 2020, right? ROE increased back 4% to 11.7%, and then your net interest margin actually got adjusted back to 2.31%. So these are the main criteria or main ratios that we usually talk about or we usually see when it comes to analyzing a bank. Of course, if you talk about the asset quality as well, things also start to normalize back. Your impairment of your loans actually stable at around 2%, 2.2%. And then, of course, the loans loss coverage improved significantly by 6.3%. And then one good ratio to also check about is the capital ratio or capital adequacy, which maintains how much capital the bank should have on hand set aside so that in the event of a mass breakdown in terms of the financial institution, in terms of a mass default, how much money the bank have on hand to actually stay afloat. So due to a significantly higher portion of impairment happening, you can see that the CET1 capital ratio and the total capital ratio of Maybank actually increased by around 55 bit points and 59 bit points. But rest assured that it's still well ahead of the figures or the ratios set by the Bank Negara, which states that the capital ratio should be around 12 to 13%, depending on what kind of perspective that you are trying to gauge the bank's strength in terms of capital adequacy. Right. Of course, many would be still concerned on the decreasing ROE of Maybank. We have touched about this as well. If your bank is performing in terms of the profit, but choose to park or to distribute these profits by giving out dividend reinvestment schemes, then the portion of your equity will actually grow much faster than your profit attributable to your shareholders. So Maybank is one of the banks that actually is quite generous in terms of giving back profits to shareholders in the form of shares, right? So you can actually opt to accept your dividends in terms of shares, and if that happens, you can see that the ROE is actually dropping, which is not necessarily a bad thing because existing shareholders get to actually receive Maybank shares instead of cash dividends at a lower price, and that actually helps to buff up our dividend yield in the long-term run. Right. Of course, we will not go through yet another table that detailed, but just to actually show you, right, as of 31st of March 2021, the first quarter against last quarter, Q4, things have actually improved significantly in terms of the gross deposits, be it in terms of Malaysia, but also in an international market as well. Singapore actually improved, and also as the Indonesian market as well, right? So of course, when your deposits and when your savings account that actually grow, that actually proves that jobs markets is actually stabilizing or improving. So when more and more people actually get employed back into their jobs, then there'll be an automatic so-called mechanism where they earn salary and automatically the salary is parked into a savings account or current account, and then that actually contributes to the deposits growth. And from there, only the bank can gauge that, okay, economy is slowly trending back to normal, and then they can actually re-strategize or reorganize their leniency in terms of giving out loans and mortgages to the public, and that overall can drive the economy back to a recovery path, right? And of course, if you look at the dividends paid by Maybank, it has always been on an increasing trend. We are just talking about cash dividends right here. 2020, that year, tough year, bank has to really hold on to some of the cash, and they actually offer a higher dividend reinvestment scheme portion. And I guess most of the investors actually choose and opt for the dividend reinvestment scheme. We get more Maybank shares instead of getting more cash from Maybank as well. So talking about valuation, we will actually look at the PE ratio and also the dividend yield of Maybank. So you can see that it's currently trading at around 13.3 times of the price to earnings ratio, and dividend yield is around 6.46%. Relatively healthy and lucrative kind of dividend yield if you compare it back to the so-called fixed deposits rates and also the current savings accounts rate that we are currently carrying. Of course, people might argue that the share price has actually corrected from the top here around 11 ringgit a share down to what it is as of today, 8 ringgit a share, because back then, before even the pandemic, there was also a little bit of geopolitical reasons that actually caused the share price to come down as well. But nevertheless, if you are actually positive on a recovery of the Malaysia economy, that things would eventually, be very, very well managed in the mid-term to long-term point of view, maybe Malayan banking is actually a good price to actually consider if they can actually get past the pandemic as of the near term, and also the geopolitical tension that is happening, which is going to be resolved hopefully in a mid to long term basis. All right. Of course, when it comes to investing in banks, a lot of times we don't just look at the bank's numbers. You also have to look at the markets and the countries it is operating in and what is the outlook. So you can see that for Malaysia, the GDP forecast is actually going to bounce up to 5.1% against a shrunk in 2020. And of course, the loan growth will also actually on path to actually recover as well. Same goes for Singapore, which is going to jump by 6.2%. And of course, for Indonesia as well, forecasted 2021 is actually going to be in a positive region. Of course, we are now in the second half of 2021. It really still bounds to see whether all three countries can actually recover back from the recent spikes in COVID cases. Even Singapore is going back into cautionary mode as the COVID cases actually breached 100 plus cases as of yesterday. And of course, one thing I think I would agree with Chubing as well is that, of course, banks will always want to, record more profit and record growth because it's a listed entity. There are many vested parties from government funds, from our employee provident fund, and even for the retail investors. We want to see our banks doing well. But apart from just going after profits and going after growth, what Maybank really did compared against the peers in Malaysia banking is that they really pivoted and improved a lot in terms of internet banking, in terms of helping consumers spend their money, budget their money, and also help supporting the local businesses that are really hit hard by high delivery fees and by the uncertainty of the COVID. Sama-sama Local is one of the very good initiatives to help assist local hawkers and small grocers to actually stay afloat during this very tough time. So what we really see is that, yes, it's important to grow from numbers and business point of view, but also take care of your current consumer and your current clients so that everyone can stay healthy and escape unscathed during this very tough period of time. Right. Of course, over in Singapore, things have been in recovery mode for even the Singapore banks. We show here is DBS Group Holdings. You can see that it's just slightly cheaper than DBS, but in terms of dividend yield point of view, Malayan banking is actually offering a more lucrative kind of dividend yield. Right, I'll pass to Chun Beng to share his verdict. Is Malayan banking going to be, a solid bank to actually recover or to actually stay strong during this another COVID wave in Malaysia? And would it be your choice or your opinion to actually look closer into Maybank if it's actually going to recover or not?
I think regardless, I think long term wise, definitely it's either we live with COVID-19 or we manage to actually get rid of it. So I think, like it or not, we'll be able to overcome it. It's just a matter of time, right? And the reason why we put in the DBS chart is just to give you a portray when things started to get better. Bank will follow accordingly because it's quite direct. I mean, maybe a lot of people lose their job, business cannot continue during the bad time. But when everything comes back to normal, they survive through. They will go back to their track. Businessman being businessman, tough time. They go on, become the Grab driver, Lala Move driver, whatnot. It cannot just kill them. If they manage to survive, they'll come back to business and they will need money. So I think instead of comparing like, wow, Singapore is doing so much better in terms of their performance, especially on the bank. And of course, if you lose it, you didn't manage to buy on the low time back in, I think, few months back, I mean, last year for DBS, maybe Maybank is the one that you should monitor closely. Nevertheless, it has been very, very lucrative. I mean, very, very generous when I talk about dividend payout compared to, let's say, public bank, right? If you just look about stability and also dividend payout, of course, this is one of the things that you should take note, but bear in mind, it won't be something like tech stocks or whatever semiconductor stock that during the good time you just go up like crazy. It's quite hard to achieve those, but it gives you a certain taste of the stability. And of course, I mean, if you're not confident with the Malaysia overall situation, bank alone, there are a lot of spots that you can go after lah. Not only just Malaysia Bank. We also used to cover DBS Bank in our articles. If you guys are interested to actually know more about banking sector beyond just Malaysia, let's say Singapore, or even across the regions, feel free to actually leave a comment inside. Leave a comment, let us know, or you want us to actually cover the other bank, let's say Hong Leong, RHB, we are happy to cover it if we have the chance to do it.
Of course, banks are not usually that straightforward to analyze because it involves a lot of numbers, analysis, a lot of ratios. But hopefully, we hopefully that today's sharing actually brings you through that they are just a few key ratios that you need to understand, and not just understand and take the numbers as it is, but also to rationalize it. It's low because of what, and then is that reason acceptable or not? Say, for example, ROE is lower because more and more existing shareholders are getting rewarded by actually opting to get their dividends as a share rather than cash dividends. So that actually pushes down the ROE. So in my opinion, that shouldn't be a big concern. So there are other aspects as well. Of course, if you think that we haven't covered any concerns that you have on mind, do leave us a comment on the questions that you have, and we will be gladly assist you and to point out if we are able to. But that's it for today. We hope that this has been a good sharing on quite a technical point of view for Malayan banking. If you have any other banks, be it Malaysia banks or overseas bank, that you want us to dig deeper, let us know in the comment section as well. But that's it. We would want to end today's episode. We'll see you in the next episode of Not So Late Show. And take care and bye-bye.